Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. Rick is chatting to us today from San Francisco. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. It's nice, beautiful weather here in San Francisco, by the way. This is kind of when San Francisco has its summer.
I know, of course, Mark Twain said it best, the worst winter I ever spent was a summer in San Francisco. And the guidebooks say October is the best month to visit San Fran. It's when it's the warmest.
Well, it is. It was, I stepped off the plane yesterday and it was 90 degrees. Of course, that's something that San Franciscans are very unaccustomed to. And it's cooled off a bit today, but, you get into the 90s here. It takes a couple of days sometimes for all the fog to get sucked in and cool things off.
The debates were held between Hillary and Donald last night. I hear the Mexican peso is up because people thought Hillary won the debate. Is too much attention being paid to politics and its connection to the markets?
Oh, it could really wear you out, Jim. You know, it seems like they're surveying down to the level of every legislative district in Tennessee every hour, just to get a fix. I think the pollsters are all absolutely 100% totally wrong. I don't think you can believe the polls. I don't think you can believe what you read in the papers. The news media seems to have, they're going all out to elect Hillary, and I think that the coverage is fundamentally wrong, if not to say dishonest. So, but it really could wear you out. And the idea of the peso rallying on, this is the way traders think. And I don't think that any trader could look at this proposition that, the greater likelihood of Hillary as a result of last night's debate should make the peso rise. But they don't do it because they think that way. They do it because they are programmed to respond to how they think other trade desk guys are going to respond. So they're not really buying into the whole peso scenario. They're just saying, well, I know that if I don't buy this, my colleagues will, so I better jump on it. So it's really just kind of knee-jerk reactions in every and all directions.
How's the value of the U.S. dollar doing with all this political debate?
Well, I think the dollar is in a bigger, it's in a long-term bull market. And, we've discussed targets up around 120 that were reached in the dollar index, back in the beginning of the millennium. And, I don't have anything more to add to that really. Dollar certainly has been, strong lately for whatever reason. I think the fundamental reason has to do with, deflationary forces, and also because of the global utility of the dollar. But that said, 2015 has been it's been a push for gold. We were trading today almost exactly where we were in mid-January, and so you could say the dollar's going nowhere. But if you look at the bigger charts, you see that all of this sideways movement from the beginning of 2015 is essentially a consolidation of a big rally that we had in 2014 and into early 2015. And you don't need to be a chartist or technician to see the bullishness of this flag formation.
Right. And what exactly is a flag formation?
Well, you put up the flagpole, that's the rally, and then you just go sideways for however long it takes to consolidate for another move up. And when you look at that on a chart, it looks like a flagpole on a flag.
Now, Mexico paid a lot of attention to the debate last night. Obviously, if they think Hillary won, their prospects for not having to build a wall, if that would ever happen, are a lot less.
Well, if anybody who was pondering this or writing about it had half a brain, they'd realize that Trump poses no threat to trade with Mexico. I think at heart, Trump is kind of an Adam Smith businessman, or he has an economic theory behind some of the things he says. I think it's instinctually a bit of Adam Smith, which means that, or I should say David Ricardo in this case, because you have what he called the invisible hand, that we're always motivated to trade with countries that sell us things cheaply. And if we're buying things cheaper from them than it would cost to produce it ourselves, then in theory that frees up capital to invest in things where we can excel, where we can be the low-cost producer. And there's the theory of it is irrefutable. If let's say Korea wants to dump cars on the U.S. market, it behooves us to buy them and to move away from producing cars ourselves if Korea can produce them more cheaply. The only problem with Ricardo's invisible hand is that we've got a regulatory structure and currency wars and all kinds of political factors at play in economic markets that do not let those markets do their job. But I think even Trump is going to go for the low-cost producer in the end, even if it requires a little rejiggering of the tariff arrangements with Mexico.
China has just reported its strongest profits in 3 years. Now, can we believe anything that they tell us?
No, I don't think we can. It's a little bit like, in the 50s, 60s, 70s, we tried to estimate the strength of the Soviet economy, and it was impossible. The Kremlin was using the estimates of Western economists because they themselves didn't really have a handle on what Russia was producing. But sometimes when we saw the output in the form of East German cars and some of the junk that the Russians produced, or the East, we got a sense of really how far behind they lagged in production. So China's the same way. I mean, they could sort of peg economic growth anywhere they want. They could say it's 4% or 6% or 8%, but we only get a sense of it on how full the shipping lanes are with Chinese products coming here and the price we pay for those things. But China most surely has a problem when it gets a little bit of a recession. In this case, not a recession that was caused by by falling exports, but really by the main problem, it's triggered by a shortfall of demand at Walmart here. But when China sneezes, it's worse than a cold, and of course they've got to jockey so many people around. There are whole cities that have been built on factories that simply produce Nike sneakers. So it's very hard for China to adjust, and they're certainly they're in for a rough ride because we've got the air coming out of a capital investment boom that far exceeded global demand.
Yes, of course, they're artificial cities with nobody in them. Do they ever hope to fill them?
Well, Jim Rickards, the economist, wrote a very interesting book called The Death of Money that talks about some of these ghost cities in China. And, before I read that book, I was under the impression that there are a few of them, but the Chinese seem to be managing them because the Chinese savings are infinitely deep, and, they can afford to take a hit until these cities become useful. But Rickards made some very interesting points. Number one, the number of those cities is huge. He took just one example. I can't remember whether it was concentric circles that he drew around Nanking, and he examined that there are many of these ghost cities that exist. I think there were 200 places in China where you had kind of a network of ghost cities, and but more to the point, he looked at it in a way that I don't see anyone using. Nobody brings this point to bear, but you know, the build it and they will come idea turns out to be completely wrong. If the Chinese build this city with the idea that to build it and they will come, put a big building here, and we will have you know, research people use that building, and there'll be factories that work in conjunction with the research. And when you get down to real cases, you can build that building and say, well, this is where industrial research will take place, but it doesn't happen unless there's an organic feeder stream of universities, of technical colleges in China that send graduates to these offices to do their thinking. So, you know, if it's only the market economy that can kind of create the activity that you need organically. You can't just build a building and say, you know, this is where our research and development will take place. You need an educational system that's geared to filling that building with, you know, with engineers and scientists. So China's exposure in the end with these ghost cities winds up being huge, much bigger than you might expect, and the prospects of filling all those cities with economically productive activity is well, I don't think it's so good. Or at least it's not good looking out over the let's say 5 to 10 year economic horizon.
Yes, I heard the lack of universities would be a big holdback for any of those cities to develop. All great cities all have great educational institutions.
Yeah, and that's true. You can see when everything clicks, everything really works. You have a city like Pittsburgh. You know, Pittsburgh came out of an age where it led the world in steel production, and of course, all steel production, or most of it, moved offshore over time. And Pittsburgh could have become another Detroit, but it didn't. You had some very far-thinking, visionary leaders there, and they did a number of things that essentially gave Pittsburgh its organic growth. And that's really working now because Pittsburgh always had very good housing stock. So high-tech companies are locating there because they're able to tell employees, well, you go to Pittsburgh, and it's not going to be $2.5 million for a starter home in Mountain View or Los Altos. This will be, we can get you a nice Pittsburgh mansion for $400,000. So, you know, Pittsburgh became a university town, a financial center, and the way in which it kind of weaned itself off steel production is instructive to the rest of the world. But it shows that you really have to come at that the problem from 6 different angles, and with Pittsburgh, they did that.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, Canada's biggest bank, the Royal Bank, has said if energy doesn't succeed, Canada can't succeed. Is that putting all of our eggs in one basket?
Well, again, you know, Canada can take that Pittsburgh attitude and say, well, if energy doesn't succeed, we're going to have to find another way. You know, Canada's economy is most surely susceptible to global ups and downs in demand for energy and timber and other resource-based things. but I'm not sure they have to throw up their hands and say, we're completely energy dependent, or at least the economy is. On the other hand, you could say the same thing of the U.S. about the U.S. Like, where do we go from here, and what kind of industries are going to be created to keep people working where they're being displaced in so many areas by, let's just say it, robots. So to me, some breakthrough in energy is probably the biggest thing ahead for the U.S., but nobody knows what it's going to be. It could be cold fusion, it could be some anti-gravity canceling device, but most likely, just based on what you see, it's going to lie in the area of energy storage. And we've got Tesla coming at that, Google, and a number of other innovators. So there are places where the U.S. economy and even Canada's economy could grow, but they're going to have to think outside of the box, really, to find their way to something that will, an economic area where Canada can compete. It's going to take, again, an organic approach that brings in many experts, many possibilities.
Well, Alberta, of course, is oil obsessed, and yet Alberta has one of the sunniest climates on the planet. Why aren't they looking at more solar?
Natural inclination, it's, you look at Iran, and they've got enough natural gas really to run the world for the next 20 years. But, of course, they've been developing quote unquote nuclear facilities, but it's really, force of habit for Alberta. They produce what they do, and I guess energy, I haven't, filled up a gas tank up there, but I'm assuming that it's relatively cheap for Canada to do that.
Well, it's cheap in Alberta, but not in Vancouver because we have so many taxes on gasoline. We pay the most tax on gasoline of anybody in North America. And they actually wanted us to pay even higher sales taxes to pay for transit, which already gets a 17-cent a liter tax. And people voted that proposition down. I think we're taxed to the max in Canada.
Well, I think we are too, and the unfortunate thing is that any time we're taxed, like if they were to raise the gasoline tax by 15 cents a gallon, it wouldn't go toward improving transportation infrastructure. We're pretty much locked in right now to every tax increase or bond issue going to pay the pension and health care benefits of people who work in this case, the transportation sector. So, when Trump talks about, or Hillary for that matter, talks about an investment in infrastructure, we don't have the savings. We don't have the money to invest in infrastructure. It's all going to go directly to pension and health care benefits. That's already a big factor in the U.S. educational system, where if California floats an $800 million bond for quote-unquote education, virtually all of it goes to, teacher pension benefits, and it's not going to change. Most pension plans are on their way to bankruptcy.
One thing mentioned in the debate last night, Hillary brought up that Trump had to give his tax returns to apply for a casino, and she said, well, back then in the 90s, you didn't pay any tax at all. And he said, yeah, I'm smart. How's that going to ring with the average American who has to, fork over so much of their pay every year?
I think it'll sit very well with them. It's only the media that makes a big fuss about the rich not paying their fair share, but it's really just a small segment of rabble in the Democratic Party who thinks that taxing, for one, estates at 60% or higher at some levels is going to be somehow productive. The point has been made that you could tax all the multi-billionaires at 100%, and it really wouldn't pay the bills of this country. So I think Trump's, to say it another way, Trump's saying, well, every successful businessman is duty bound to pay the least amount of taxes possible, but to stay within the rules. So I think people understand that really, and Hillary can try to stir up resentment, and it's always going to be there in some way. But in the end, there's no denying Trump's success, and I think that's what's really going to engage the minds of the voters.
And many people believe as well that a dollar in the hands of a private citizen as opposed to the government is a productive dollar.
Yeah, but we do have that problem, where we've reached a point where the 53% of the voters who take rather than give are controlling the election, and it's natural for them to say, well, I don't really care whether if we confiscate a dollar from some zillionaire and put it in the hands of the government, at least it'll have a chance of finding its way into my pocket. So that's this election is probably the last chance we're going to have to put a kibosh on the 53%. And that sounds paradoxical. The math is not right, but I think that the mad as hell, not going to take it any longer factor is going to overweigh the 53-47 or 52-48 tilt, and I think it will favor Trump. It seems preposterous to me that voters are going to go for the status quo candidate this time, which would definitely be Hillary, considering how angry they are about pretty much everything.
Rick, anything else you wanted to tell us today?
Well, let's see. A couple trends I'm watching, and I kind of watch them even more faithfully when they're going against us. Number one, gold's off a bit today, but we shouldn't lose sight of the fact that the bigger picture in gold is still bullish, and I would have said the same about Treasuries, but Treasuries are finally starting to move again. We've had a pretty good correction, but again, on that flagpole pattern, everything that's happened since the long bond started coming down back in early July is really just a correction of a very bullish flag. So I think there's still great opportunities on the long bond, and it comes from the skittishness that most investors feel about, hey, interest rates are at someone in my chat room said they're at 5,000-year lows. And so, when you buy these treasuries in the form of zero coupons or long-term muni strips, you're essentially betting on even lower rates. And that's what I think is going to happen. I think it's still a great bet, all the more so because so many people are so scared about this idea that interest rates can't fall much farther.
Do you think the Fed's going to boost rates some point this year?
I'll say what I've been saying for most of the last decade, that the odds of real Fed tightening are on a par with the Martian invasion. It's not going to happen. And, the Fed may walk the walk, or talk the talk, but they're never going to walk the walk. In all the years that I've been saying tightening is as likely as a Martian invasion, I've only been wrong just once for a 25 basis point token hike. And I think that's all we're going to see. And it just amazes me that the Wall Street Journal and all the other papers just kind of buy into it about, they're really serious about tightening by the end of the year. It's not going to happen.
Rick, thank you so much for chatting with us.
Thank you, Jim, for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.